Review of 1995 budget. The 1995 budget was a budget of hope, a budget of incentives, a budget of liberation, and above all, a budget of renewal in which this administration has sought to create an atmosphere designed to encourage the ever-enterprising Nigerians to exploit their potentials to the attainment of self-sustained national economic development. It is gratifying to state that a good measure of macroeconomic stability was achieved in 1995. The estimated growth rate of the economy was 2.7%, due largely to crude petroleum, which is 0.78%, and the producers of government service 1.06%, relative to the recorded performance of 1.01%, minus 2.6%, and 2.5% respectively for these indices in 1994. The growth rates for agriculture and manufacturing were 3.19% and 2.01% in 1995, in contrast to 3.02% and minus 5.04% achieved in 1994. Although the inflationary measures persisted during the year under review, the measures put in place to curb inflation have begun to show positive results. The macroeconomic measures designed to relax the pressures in the 1995 budget needed adequate gestation period. The reasons for the inflationary pressure are not far to seek. Low level of production by industries, high transportation costs and foreign exchange rates, the expansionary physical operation of government in 1994, coupled with increased pump price of petroleum products later that year, fueled inflationary measures. It is expected that with the policies now fully operational, the level of inflation should be curtailed between 20% and 30% in December 1996. On the revenue front, the performance in 1995 was appreciable. Aggregate revenue accruable to the Federation account was 165 billion naira, representing an increase of 43% compared to the budgeted amount of 116 billion naira. It is worthy of note that the non-oil revenue performance, for instance, amounted to an increase of 68% over the 1994 receipts. From a fiscal deficit of 81 billion naira in 1994, the federal government recorded a fiscal surplus of 1 billion naira in 1995, or 0.06% of GDP. A higher level of surplus would have been recorded but for the increase in personnel costs resulting from the increases granted late 1994 in respect of accommodation and transport allowances. Besides, there was domestic debt service charge amounting to 28 billion naira. In the external sector, pressure on our balance of payments remained unrelenting. Our total external debt stock as at December 31st, 1995 stood at $32.585 billion. The increase from $29.429 billion in 1994, in spite of the fact that no new loans were contracted during the year, resulted from a combination of accumulated debt service payment arrears and depreciation of the United States dollar relative to some key currencies. Although significant achievements was recorded in 1995 over that of 1994, more efforts still have to be made to further improve the living condition of our people. Factors that militated against our rapid economic growth include inadequate technological capacity to make our industry respond quickly and positively to perceived local export demands. Moreover, our economy was threatened by a partially distressed financial sector, limited infrastructural facilities and services. We must, as a people, fully evolve optimal structures, arrangements of opportunities for rapid national economic advancement, and effectively capitalize on these measures which have so far been established particularly by the 1995 budget. We must continue with our efforts to lay a solid foundation for an efficient market economy in 1996 and beyond by steadfastly fine-tuning and consolidating the considerable gains of the 1995 budget so as to move confidently towards higher spheres of self-sustained economic development. This is the major thrust of the 1996 budget, which is indeed a budget of consolidation. 1996 to 98 National Rolling Plan.